Welcome back. Those of you that stuck around, we are actually doing our cryptocurrency half an hour now. We got some really cool stuff to talk about because to me, I'm a cryptocurrency accumulator personally. This is something that I'm very passionate about. We've got some really good guests that I want to introduce in the cryptocurrency space. So Mike Arnold, you're back with us from Path Trading Partners. I think it's really great to be talking cryptocurrencies with you because it's something you talk about quite a bit. And then I also want to talk to Dan Held, is that right? Dan Held from Kraken. Both of you on Skype, both of you braving the confines of your own home where there's likely no virus. Dan, let me start with you. Tell us what Kraken is, what you want to talk about today, and where we're going to go with this.
Yeah, sounds good. So Kraken is one of the oldest Bitcoin exchanges out there. It's a spot exchange that started in 2011. As you know, crypto is an intensely volatile and kind of a wild west market. And Kraken is one of those companies that sort of established itself as one of the foundational core infrastructure pieces of the community.
So Kraken is an exchange then, is that right?
Correct. Kraken is a spot exchange. We also do have a futures exchange as well that came with our crypto facilities acquisition in the UK. But today, I think we're just going to be focusing on the spot exchange.
Yeah, no, spot's important. Obviously, without spot, we don't have futures. I mean, futures are really started as and exist as a hedging vehicle for the spot market. So from a perspective of which market sort of leads, it's always the spot. I mean, you're always looking at the spot is where the market is being created and the futures is adjusting to the spot. Mike Arnold, Path Trading Partners, you're back with us. You look at cryptocurrencies quite a bit. You put out videos on the Path Trading Partners YouTube channel. Is this, where are you at with Bitcoin right now? Like, what are you thinking specifically with Bitcoin? And then we'll touch on some of the others.
Actually, right now we're watching for a potential short-term Bitcoin double bottom buy pattern that's setting up right now on a 15-minute time frame. So that would be on a close above 48.85. That's what we're watching for, and then that's a full price target of about 5,380. Again, that's a shorter term trade, but there are opportunities setting up right now in some of the cryptocurrencies. So that's one that we're eyeing right at the moment.
So Bitcoin, Dan, specifically selling off right now, but it's an uncorrelated asset. It's a non-correlated asset, which is funny because that's what people have been looking for forever. I mean, I was in the fund-to-fund space, going to commodity conferences where every single guy was talking to you about having a part of your assets in things that were non-correlating, and that's really what Bitcoin is. It's going down with the market now, but maybe you can explain a little bit about that, like the non-correlating qualities of it and where that's shown itself.
Absolutely. You know, Bitcoin is an entirely new asset that is really hard for a lot of people to think about and conceptualize a price. Bitcoin over its last 10 years has really moved in a very, I would say, uncorrelated manner. I mean, if you zoom out and you look at how the price has moved over time, we definitely see Bitcoin surging whenever the markets are surging. We see it dropping when the markets are surging, and we see the inverse. So Bitcoin has moved from, you know, when I first got into it, from $10, went all the way up to 20,000, now back down around to 5,000. So, you know, Bitcoin has performed decently well with this huge sell-off in the mainstream markets. I mean, Bitcoin, in the eyes of most people, is still very risk-on. It was purposely built to be a risk-off asset over time, a safe haven asset, a digital gold 2.0. But it takes a long time for that sort of narrative to permeate the consciousness of mainstream traders. And so I think this came a little early for Bitcoin, where Bitcoin is trading very much right now as a risk-on asset. But there is no bailout for Bitcoin, and it still hasn't, you know, breached historical lows. So I think Bitcoin is actually performing quite well, all things considered.
Well, it's interesting because there is no monetary policy for Bitcoin, right? I mean, when you say there's no bailout, there's no centralized government function or mechanism anywhere really to either bail out Bitcoin or prop it up. So since there's no really fixed monetary policy, how is it affected from a perspective of does a government like the US, does their monetary policy affect it? And secondly, are you looking at the selling of these risk-on assets? Like you just mentioned, Bitcoin was built to be a risk-off. So is it coming off now just as people need to generate cash and you expect that bid to build up again, or what are you thinking?
Totally. I think on Thursday we saw a liquidity crunch. We saw that across Bitcoin, mainstream markets, and gold. I mean, gold sold off really, really hard on Thursday. It's down 4.5%.
When we come back, we're going to have more on what's going on again. Skeleton crew, so show must go on, I guess. We'll talk to you in a few minutes. This is Bob Iaccino. I'm back talking cryptos with Mike and Dan Held. Mike Arnold, you know. Dan Held, we just met. And Dan had some great information about liquidity and the growth of the market itself, the spot market, not the futures market, but the spot market. And Mike is very wonderfully looking at the camera right now. So Mike, I want to ask you a question. What is your, I'm going to guess, knowing you so well, that Bitcoin is your focus, but what are some of like the, Dan mentioned how the US dollar or the reserve currency of the crypto world is Bitcoin. What are some of, what's like the euro and the yen to you, Mike? Like what are the next two you kind of like to look at in the crypto world?
My next two go-tos are Ethereum and Ripple. Those are my next two go-tos. Those are my top three that I monitor regularly. Most of the time for signals, I mean, we still have things like I'll watch Bitcoin Cash, I'll watch Litecoin, I'll watch EOS, but the top three are definitely Bitcoin, Ethereum, and Ripple.
Dan, how does that go from a volume perspective? Is it the same, or is that just Mike's preference?
Well, volume was very much stacked in Bitcoin. I would say that it's, Bitcoin is probably 70 to 80% of the entire volume of crypto assets. And then sort of a trailing off from there. But, I'd say Ethereum and Ripple are both, very, very liquid markets as well.
Mm-hmm. So, Dan, for those people that don't understand what a spot market is, you and I have talked about it very briefly. And obviously a futures market, you have the trader. And then if you just were to follow a flow chart, you got the trader who puts his or her money with a broker. That broker guarantees that money, and it's guaranteed again at the exchange, and the trades flow in that same sort of flow. Can you talk about how that is relative to a spot market and how important kind of one is? Not necessarily over the other, but futures are obviously the complement to the spot market. So let's talk about how important the spot market is and what the difference is.
Yeah, it's pretty interesting because when crypto first started, there was actually no brokerages in this space. There was just direct market access by retail traders. So each retail trader would have a seat at the exchange. They wouldn't even purchase through a brokerage. Now we've seen much more advanced, and market infrastructure being built where we have a lot of different brokerages. For example, Square Cash is an example, or Robinhood. And that, is a much more friendly GUI or interface that retail users interact with. With these spot exchanges, what's really interesting with crypto is when you purchase the underlying, you purchase Bitcoin on the spot exchange, you can take that Bitcoin and withdraw it to a wallet of your control. So you're not, you don't have to trust that your broker has your assets. You don't have to trust that the exchange has your assets. You can withdraw and hold on a special device to where no one else in the world can touch that asset unless you give them permission to. And so I think that's really unique from a property rights and ownership perspective. And a lot of the reason why Bitcoin was created is the sort of self-custody, self-sovereignty nature of the asset. So I'd say in sharp contrast to a lot of different markets, you truly own the underlying here in a way that is unparalleled compared to any other asset.
Yeah, one thing I want to point out, Dan, if I could, to everybody still watching, still with us, is that Dan keeps calling it an asset. And I think that's critical because that is really what it is. It's not just because you can't actually physically hold it. You still are going to look at the money that you use on your debit card as an asset. So it is an asset. It is a new asset class. And I think it's very valuable. I want to say thanks to Dan and Mike for being here. We're going to say hello to a couple of more guests that we've got in for our little cryptocurrency half an hour here. We've got Bob Heffernan and Jay Schulman, and both of them are involved in the space, have been involved in the space, and know quite a bit about the space. So I want to get to them and talk really about some of the aspects of cryptocurrencies that they're interested in, the trading side of it. We are an active trading show. We do talk about active trading and active investing as an actual part of a portfolio, not a giant part of a portfolio, but something that everybody can participate in as long as they do it in a responsible way. So as soon as we get those guys on, I want to take a look now at where Bitcoin currently is trading at about 43.95, and we're looking at that's Bitcoin versus Euro. So Bitcoin versus US dollar, my bad. That is Bitcoin versus US dollar. We're at about 48.58. So it is down another 7-8%. We are going to bring Bob and Jay on and talk about what they think about these moves and what they think about the asset. And again, I think it's important to talk about the asset as an asset. So, Bob Heffernan, Jay Schulman, welcome to the show. And Bob, if I could, I want to start with you. Like, you obviously are from the trading floor. I actually recognize you. How long have you been involved in this particular space, and what got you excited about it?
I actually got into it through an ICO in the end of 2000, the run up of 2018 or 17. The ICO was called the Pareto token, and I was particularly interested in it because, like most things crypto, they're looking to disrupt an existing entity. And the Pareto token was looking to disrupt information around trading and make it more equitable for the people that are talking about trading ideas and information and intel, and kind of match them with consumers of that intel. So I came to it from a strictly technical trading point of view. I've been involved, obviously, on the trading side on the floor since the late 80s. And I thought early on that as soon as there's enough price discovery going on, this is like any other asset from a technician's point of view, and just bring technicals to it and trade it like you would, anything else. I mean, I remember years ago, my brother, who was also in the business on the floor of the Chicago Board of Trade in the soybean pit, and half of the guys had never seen a soybean. A physical soybean. He brought them in and started handing soybeans out to these guys in the pit, and they're like, "What are these?"
Fantastic.
It's what you're trading. So, I've always come to things from a technical point of view, and that's how I continue to approach crypto markets.
Jay Schulman from RSM. Jay, tell us what RSM is, how you got involved in what we're talking about right here, which is cryptos.
Yeah, I mean, it's so funny that people don't see the I've never seen a soybean, because that's exactly what's interesting about this space, is that people ask me all the time, but what is it, right? It's just this digital representation of an asset. And I think that's where I go back to. A lot of times we've never seen anything as it relates to soybeans and corn and oil and all of that. So it's not that much different. I go back, I'm a technologist, so I got in early from a technical perspective because it was very intriguing to me.
Mm-hmm.
I'm amazed at how this asset class has grown and where we are today. And I think that we're at the very beginning. This is not, I think I can't remember if Dan was talking about it earlier. We're not anywhere near the maturity that we'll get. And I think that if you think about the origination of Bitcoin, it had a lot to do with printing money. What just happened in the last week, printing a lot of money. So I think it'd be really interesting to see where this asset class goes.
Yeah, and of course what Jay is referring to is QE5 along with the 100 basis point move that the Fed did. So we've definitely got more money printing that's going on. And interesting quick story, if I could throw it in, is I actually did a local radio show, which both of you would recognize the name of, and they asked me to explain why they should be interested in something like Bitcoin. And the first thing that the host of the show said to me was, why would I want to trade or invest something that criminals use? And I said, reach into your pocket and pull out what's in there. And he pulled out what I'm showing right now, which is a wad of cash. And I said, that's what criminals use right now, and you're perfectly comfortable carrying that in your pocket. So, Bob, from a perspective of how you trade it, so you're a technical guy by your nature anyway. How are these markets responding, both technically and from a liquidity perspective? And is it something, are you focused on Bitcoin, or like Mike Arnold, do you have sort of like a B and a C that you trade as well?
Well, to be perfectly honest with you, I think part of the problem with the crypto sphere is, in 18 when it fell off, and there's just so much more liquidity in other places to trade. And I've been trading my whole life, so my focus has gone back to trading fiat things by and large. Now, the same thing going on in those asset classes are what's happening in cryptos now, just incredible volatility. And my analysis goes the same. And I have mostly been a beta trader in cryptos, meaning I generally just want to be on the long side, so waiting
Right.
for long
So
opportunities,
you accumulate,
obviously.
really.
Yeah, exactly. Where on the fiat side, obviously, I never saw a market I didn't want to sell in the fiat side. But for crypto in particular, I don't think, you know, I don't think the story's done yet with the coronavirus and asset classes. Um, and I don't think they're done in crypto yet. And so I have fractaled out to much longer term time frames. The problem, again, in crypto is some of these things don't have enough price discovery from a time frame perspective to fractal out. Bitcoin actually does. You can actually get out to, a quarter of a year, a half year chart, even the annual chart, and still see what's going on there. Um, but a lot of these coins, especially the altcoins, do not have enough price discovery for that to take place.
Jay, do you have an opinion on where sort of the usability comes in from a technology perspective? When you're looking at something like Bitcoin, I've always said it's two things. It's, again, a friend of mine called it a high beta store of value, which I thought was a great line, where it's a store of value, but you might have some movement, so you probably don't want to store all your value in it. But from a perspective of usability and the technology side of does it have to become a currency to hold value? And is it becoming a currency, or has that process slowed?
I mean, I think you hit on a really important point, and we talk about it as this alternative to gold. But the thing with gold is that even in the worst possible scenario, there's always value to gold. Not that we have our gold bars here, but we have our gold bars, and we can go and swap and trade them. When we talk about Bitcoin, again, kind of being in the early days of adoption here, is that we have to be able to use it, and I think that's where. Yes, it probably will be a long-term store of value, but an important part of that store of value is that I can go use it at my grocery store. I can go use it to trade for goods. And we're there, right? There's a lot of places that you can use it, but I also look at what's happening in the market today and ask myself the question, in a credit card crunch where average retail investors might not have the liquidity on their credit card, does this become a more popular form of payment? And so I think we have to look at the days and weeks and months ahead and look at how retail consumers use this asset, and whether in particular we see, particularly in e-commerce and maybe even in a broader scale, people choose to accept this uh, cryptocurrency, Bitcoin, as a routine form of payment.
And Jay, you said Bob brought up 2018, right? Where it kind of just had a sort of a psychological, I don't like to call it a price collapse, even though it was, because it was as much, to me, psychological as anything. We've seen those in every market as it matures. So Jay, it seemed like the usability case was ramping up pretty quickly, and then it seems like, at least from a perspective of coverage, that slowed. And by that I mean media coverage. Do you see it flat? Do you see it increasing? Or what's going on with the usability?
I mean, if we take a step back and just look at, and I think this is really important, I compare it a lot to the evolution of the internet. And when we looked at the internet, the bubble bursting, a massive amount of what we use today was developed during that timeline. And I think that's exactly what happened here is coming out of 2017 into 2018, the tickers started to go away, and we didn't pay as much attention to the price of Bitcoin. But the reality is, and that's what I've been doing, is working with companies that are building fantastic products to address this ecosystem, whether that's on the investment side or on the payment side. And so you look this morning, Bakkt got their Series B. I mean, that's an important part of the development of this ecosystem. The fact that the CME futures is robust and growing, I think we will continue to see firms enter the space to support the use of the ecosystem. And that may, right now, it's been a lot on the investment side, on the trader side. I think what we will see coming forward is a lot on the consumer usability side as well. That's what's going to make this a true store of value.
Bob, we've got a few minutes left. Do you use any of the coins or currencies that you've accumulated? Do you use any of them? And do you use the futures at all?
Yeah, I have used the futures. I haven't really used coins, although I do a podcast weekly through Endotech.io, and I've talked for 2 years going now that adaptability is the only end game here for any of these coins to have any value at all. I mean, at the end of the day, somebody has to pick up their phone and use it, or some company has to use it if it's supply chain related, or some security firm has to use it if it's ID protection. At the end of the day, if it doesn't get adopted, it's worth nothing. And so there are some great use cases for crypto and for blockchain. One that I have also investigated is music rights and distribution. I think that's a area that can be greatly disrupted because of the inequity in that model. So yeah, I have, and I actually, how about this? I actually published a song on the blockchain. Went into studio, recorded a song, published it, because I had to go through it and see the use case, and then say to myself, is this actually adoptable? Would somebody actually take these steps? And then at the end, is it actually more beneficial for the musician going forward to adopt a different model?
If I could jump in on that, I
Please.
think that's a fantastic point. You being able to use it and feel it, but that music rights example is really important. As we look at, you can see I'm sitting here at home. We've all been at home today. The changes in how we work, the idea that we can exchange cash and use credit cards and things like that. I think some of these use cases that maybe we weren't terribly excited about, we didn't think have legs, are actually going to get legs, because putting music rights on a blockchain is actually the most efficient way to move music into the market. So I think we really have to look at the changing culture, and a lot of these use cases that maybe haven't been terribly exciting will get more exciting in the coming days and weeks.
Jay, where can people find you at RSM if they want to talk to you?
rsmus.com/blockchain has all the information about what we do, really focused on helping our clients on the audit, tax, and regulatory side deal with all of the issues around digital assets. Thank
Bob,
you.
same thing, and make sure you throw your podcast out there.
Absolutely. Thank you very much.
Yeah, what's the name of your podcast, Bob, before we go?
Oh, you can see it at endotech.io on YouTube, or at the endotech.io website. Also, it streams there Sunday nights, and endotech.io is also where you can find my blockchain vital sheet, individual coin signals, and full algo driven portfolio modeling.
Perfect. Guys, thanks for being with us, and thanks for sticking with us if you did for this cryptocurrency half an hour, and we will see you guys in the next show. I'm Bob Iaccino, and you've been exposed again.